Here we are, folks, again for another edition of Wisdom Wednesday. And this is a three-part series, actually four-part, but this is part three. All right, this is what home buyers wish they would have asked, first-time home buyers. Okay, last week we discussed credit. Now let's discuss rates, payments, and other goodies that have come up. Question number 11. Since we're on the topic of rates, let's discuss discount points. Discount points allow you to buy an interest rate below the market or higher than the market. When interest rates are published, what a lot of people don't know, there's a corresponding price that's attached to them. If you need or desire money to be applied to your clothing costs, you can choose a higher rate, and that's called a premium price. The credit is then applied to your closing costs. That may help some people who need that, okay? However, if you want to go the other way and get a lower rate, lower than what the market offers, you can permanently or temporarily buy down with discount points. This is what we call buying down the rate. Okay, discount points can be paid by the buyer or a seller. If you're able to negotiate a seller credit into your purchase contract, then that credit may be applied to buying down your rates or money towards your closing costs. Okay, that's what you hear, buy down the rate. Should I buy down the rate? What are my points? You'll hear those terms. Okay, we're all the sharp realtors who know how to put deals together. That's who we like to work with, realtors who can get it done. Your other option is to go with the market rate or the par rate that has no credit and doesn't require any points. That's just the rate it's here. It's going to be a little higher in some cases than the lower offered rates. Make sure you discuss with your LO before you make a decision. Okay, question 12. Now, let's discuss what's included in your monthly mortgage payment. Most loan programs will require the lender to collect a portion of your real estate taxes and homeowners insurance each month so that the lender is able to pay those bills when they become due. Here's how it generally works. Okay, your mortgage payment is composed of your principal payment, which is the money applied to your note amount. The monthly interest as well that you're paying on that loan. Okay, property taxes are 1/12 of your real estate tax bill, and that's collected as well each month. This way, when the tax bill becomes due, the lender has enough money to pay it. Here's something important you need to know. As we know, taxes rise and lower. This means that your payment can change if they do, okay? The lender has to collect more money, so you might get a higher monthly payment the next month that you see your statement. This means your payment will go up even if you have a fixed payment. We don't control that, okay? We don't control taxes, okay? We don't control what happens with your taxes. So I like to warn people up front that this may happen. The same thing can happen to your homeowner's insurance. If something happens and your homeowner's premium goes up, then we're gonna collect a little bit more. You'll get a heads up. Okay, it doesn't just hit you in the chest, you get a heads up. Okay, on the other hand, your mortgage insurance should not change. Mortgage insurance is a fixed monthly insurance premium that protects the lender in the event that you don't make your payment, right? You screw up, that's gonna cover the lender. The good news is you can pay down your mortgage to a certain level and this insurance premium will drop off and your monthly house payment will go down. Or you can do like what I do with my clients is I keep them abreast of when it's time to refinance so we can get rid of that mortgage insurance and drop your payment right there. Okay, question 13. Some of you are blessed to have great parents or relatives or friends that can help you buy your first home. Yes, you can use gift money for all or part of your down payment and closing costs. The lender, like me, will simply verify the donor's gift, have them sign a gift letter, and verify the transfer of the gift at or prior to closing. We do it all the time. Okay, now, who's on your Christmas list, right? Like, who's gonna be at the Thanksgiving for helping you get in that house, right? All right, question 14. An expression we hear a lot in the industry is, or contracts is loan to value, or you might hear it expressed as LTV. Loan to value is the amount of money you borrow compared to the purchase price, okay? This is expressed in a percentage. You might see 80% loan to value, 90% LTV. Okay, for the non-math people out there, here's an example. If I buy your house for $299,000 and I put down 5%, then my loan amount is $29,500. This means my loan is $29,500. That is a loan to value of 95%. Loan to value is important because it determines your rate, whether you need mortgage insurance or other types of program restrictions that you're gonna have. Okay, that's a whole nother topic. All right, question 15. When we discuss Monthly payment, a few minutes ago, I talked about mortgage insurance. Mortgage insurance only protects the lender, not the borrower, okay? That's very important. It is required if you put down less than 20% on a purchase, but not all loan programs have the same requirement, okay? There are also other options for how you can pay your mortgage insurance. It doesn't have to be paid monthly for all loan programs, but some do require monthly payment. For example, when I refinance some people and they have mortgage insurance, they still are required to have it, but they need something specific from that loan. I usually will finance the premium up front, and that's another way for them to save monthly. So there's a lot of options and things you can look at, obviously, as you find out doing this when you're buying a home. There's a lot of tricks and little tweaks. That's when you need an experienced loan officer to sit down with you. Don't just go with what you see out there on the market, and definitely don't just go with the first thing offered to you. Ask questions. It's okay to ask questions. You can't just be blind followers. All right, this is Coach Clarence, and I know a lot of these subjects seem complicated, but I'm here to simplify them. I'm the mortgage man, and I'll see you next week.